Hello, in this video, we are going to talk all things saving. Discussing saving, I'm going to call it Sip and Save because I'm Mortgage Mom Wines, and here we go. I'm going to share my screen here, and let's get started. All things saving. So whether you're a seasoned saver, a new saver, this is definitely going to help you. Just give you some education on what it means, effective tips and strategies for saving money, whether it's to purchase a home or do anything else. You definitely want to have an effective saving strategy. So getting right into it, the importance of saving money. So all of you listening to this probably understand that the economy has fluctuated. We have seen crazy inflation. Financial savings gives you financial security. And it can help you avoid living paycheck to paycheck. You can make your money work for you. The money that you save can make you more money. Compounding interest, we're working to create passive income and save for larger investments such as a home. Budgeting and automated savings. So the key to saving is to track your spending. You first have to have a budget. You have to reevaluate that budget. I made a previous video on budgeting. Feel free to check it out if you want to dive into that more. We're going to talk about direct deposit, treating your savings like an expense. Just like you make your car payment every single month, we should treat our savings just like that. Just like we make our car payment, we're going to make a payment to ourselves with saving. There's all kinds of apps you can use and programs through banks and credit cards called Round Up. So you can, for example, if you were to go to the store and purchase $48.50 of groceries, it would round up to $49, saving that 50 cents. And you might think, well, 50 cents, I mean, what's that going to do? Well, yes, 50 cents is not a lot of money, but if you're doing that every single time you're swiping your debit card, you'd be surprised how quickly it adds up. And then scheduling automatic transfers. So automatic deposits into your savings account can really help you save more money. Want to talk about high interest savings accounts. So especially if you're saving for a home and you are keeping your money somewhat liquid because you know you're going to need those funds to purchase a home or go on vacation or whatever it is you're doing, you might not want to tie it up in things like a 401k or an IRA or something that has penalties if you take it out of there. So a high interest savings account, or might be called a high yield savings account, that is something that I recommend. And keep in mind, I'm a loan officer, guys. I say this every video. I'm a loan officer. I'm not a financial advisor. These are just things that I do personally and that I know other people have had great success with. And I do have some great financial advisors I'm happy to refer you to that can help you with this. But choosing accounts with higher interest rates. So we are in a higher rate environment right now. So make your money work for you and earn interest. You can shop around for higher rates on things like CDs, high yield savings accounts, all of that to get the highest interest rate possible to make you the most interest income possible. Just to give you a couple definitions here, principal balance is the amount of money initially deposited or invested, and then interest is the amount earned on that principal amount over a specific period of time as a percentage. So some benefits of compound interest. Compound interest is the eighth wonder of the world. Einstein said that. It's so true. What it is though, is compound interest is where interest earned on principal amount also earns interest over time. So with a high yield savings account, interest is earned and it compounds each month. So you can withdraw money from a high yield savings account. It's liquid funds. Unlike a CD where it might have to sit in there for a certain period of time, or an IRA or things like that, it might have tax penalties if you take it out. A high yield savings account doesn't. So I'm going to give you an example in the next slide here. Imagine you invest $1,000 and it has an annual interest rate of 5% with compounding interest. So after the first year, you earn 5% of $1,000, which is $50. So your total becomes $1,050. You got $50 just for leaving your $1,000 in that account. In the second year, the interest is calculated on the $1,050. So it's not calculated on the original $1,000. It compounds on that $1,050. So the second year, you're earning $5,250, making your total investment $1,102.50. So that's how compounding interest works. So just make sure it might not seem like a lot, but now if you up it to, let's say, $10,000, what does that do for that compounding interest, right? So the process continues with the interest each year calculated on the new total. So that's just kind of a quick, easy breakdown for how that works. A huge part of saving is investing in debt management. So investing, starting with small investments. Always consult a professional. We don't want to blindly throw our money into investments. How many people put a bunch of money into Bitcoin and didn't really understand it and then lost? There are a lot of people who made money on Bitcoin. The point is, don't go into an investment blindly. Diversification is key for risk management, maximizing your retirement accounts. For example, if your employer does things like a 401k matching program, that's kind of free money from your employer. You really want to take advantage of that. But always consult a professional. I always say, whether you make $15 an hour or $500 an hour, you need a financial advisor. You need to sit down with a professional to go over your goals so they can tell you exactly what to save and get you on a path saving in the right accounts that make sense for you. Your situation is different from your friend's situation. Just because a Roth IRA made sense for them, it may not make sense for you with your future goals, your income, your plan, your path. So always talk to a professional that you know and trust. I have some great referrals. If you need a referral for a financial advisor, please reach out to me. I'm happy to provide some recommendations. Debt management is key. We can't save unless it's in our budget. And the more debt we have, the harder it is to save. So you prioritize your high interest debt first. This is, again, my opinion, but things with higher interest rates, you're going to want to pay those off first. Otherwise, they're accruing interest and costing you more money. Consult a professional. We do have debt consolidation options at Fairway. There's a debt consolidation link in the link in my bio on my Instagram. It's here on this PowerPoint. I'm happy to help you, but definitely talk to a professional first to see if debt consolidation makes sense for you. It might not make sense for you. Be cautious with new debt. Does this work in my budget? Really sleep on big decisions. Be cautious. Don't just take out a bunch of debt. Make lifestyle changes. Develop frugal habits. Maybe we cut our coffee down from 5 times a week to 3 times a week. Not going to save you $20,000 or $30,000 a year, but it will save you a couple thousand. Thrown into a high yield savings account, compounding interest over time. You see where I'm going here. We got to have some patience. But the first step in all of this, investing, saving, budgeting, everything, is establish an emergency fund first. That way, if an emergency does happen, you don't have to max out your credit cards or, dig into an account that you don't want to touch. Some best practices or tips for saving: consistency. And I should have added on here patience. I think consistency and patience are key. You have a setback, it happens. Life happens. Don't quit. Just get back on the plan. Pay yourself first. I mentioned this earlier. Pay yourself first, meaning just like you make your other bills, your savings should be added into that in your budget. Just like a car payment, a credit card payment, your savings is a payment to yourself. Education. I'll say it again, consult a professional. You don't need to make a lot of money to have a financial advisor, but you do have to meet with one and start somewhere. So share your goals with them. Don't overthink saving. Don't underestimate the power of saving $5 or $10 here. Don't overthink it. Creating a budget. And again, my budgeting video is fantastic. If you don't know where to start with budgeting, check out that video. And be on the same page as your partner. If you have a spouse or a sibling or anyone you're trying to purchase a home with or make a large financial investment with, be on the same page. Communication is key. And know your savings goals. Know your goals. So your financial advisor or the professional trying to help you knows how to help you. If your goal is to retire early, be specific. When do you want to retire? How do you want your retirement to look? Do you want to travel? Are you going to purchase a new home? All of those are conversations that need to happen. And now nobody has a crystal ball. Obviously, things can change. That's why it's important to meet with your financial advisor and professionals, especially if you have a mortgage. Meet with me annually, at least annually, if not twice a year, just to kind of reevaluate your situation and reassess. And your budget. You should also reassess your budget at least quarterly, in my opinion. Here is my QR code. Feel free to reach out. There's a lot of tools on there. Like I said, the debt consolidation tool is on there, home equity lines of credit application. You can schedule time with me to go over your situation one-on-one. Please don't hesitate to contact me. This was just kind of a brief overview of some savings options. If you want more, my podcast is coming out with an episode with financial advisor Kim Burbank. She's going to talk about things, other saving avenues like IRAs, annuities, life insurance. She talks about the difference between traditional and Roth IRA, all kinds of things coming from a professional's mouth. So definitely check out my podcast for more. Thanks so much for joining me on this video. I'm Megan, your mortgage mom, and I'll see you next time.